Hello everybody, I'm Josh Korick and this is your weekly market snapshot. I want to jump right on into some commentary actually before pricing. It was a very dramatic roller coaster week in the gas trading pits as the November gas contract traded as low as $4.76, surged all the way to $6.31 and dropped back down today down to $5.97. Meanwhile, the October gas contract, which just rolled off the books, rolled off at $5.84.1, the highest settle since December of 2008. The January contract closed today at $6.18, just for reference. Things are just sky high. So with the incredible gas price increase volatility of the recent week, despite 2 healthy weeks of EIA storage reports and favorable weather conditions, natural gas prices are truly just driven by financial contract speculation, no fundamentals. This is being driven by substantial demand for LNG cargoes to supply both the low inventories in Europe and increasing post-pandemic commercial activity in China. Prices in those overseas markets have risen to historic levels. You can see this in this image right here we're going to pull up, and they're dragging the U.S. financial contracts prices higher with them as well. However, this situation, in our opinion, is creating a gas price bubble here in the U.S. And we say that because no matter how high the prices get overseas, LNG export facilities are running at nearly their max and have been for most of this year. So as a result, the higher prices being offered in those countries will have no impact on our current natural gas situation, except for the bearish impact of forcing more power generation back to old king coal. The substantial volumes of gas that will be going into our gas storage fields over the next 4 to 6 weeks will not be changed by the high prices in Europe or Asia then. And the simple fact is that though we are well below last year's historic gas inventory, we're going to be going into this winter with a healthy inventory that's near the 5-year average. At some point, fundamentals in the market are going to have to rule the day long. The current prompt month November gas prices is trading at $5.86.7 a decatherm. That's up 82.4 cents since last week alone, and it makes no sense. Meanwhile, the October gas contract rolled off the books at $5.84.1 a decatherm, the month we're in. The winter 2021-22, that's coming right on up, is sitting at $5.88. That's up 80.9 cents since last week alone. The 2022 calendar strip price is $4.41 a decatherm. Now you can get a feeling when you just hear that. High up in the front again, the back end is just not supported for prices. The winter after this is currently trading at $4.06 a decatherm. That's up 14.8 cents since last week. And lastly, the 2023 calendar strip price, is at $3.47 a decatherm, up 12.6 cents. So let's talk about the storage report for this week. We had an 88 BCF change to ground storage inventory, and that was above what was expected for the week. This puts our current overall ground storage inventory at 3,170 BCF, which is 575 below last year's average, which was a record, but it's only 213 BCF below the 5-year moving average, and it's gaining ground. When we look at the regional cash out prices for physical gas here in Chicago, it is below the market, $5.29, and it has gone up 64 cents since last week. And for the folks on the western part of the state, Northern Natural Gas Ventura is $5.20 a decatherm, up 67.5 cents since last week. So, talk about the weather. Why is the inventory doing so well? Well, look at Wisconsin. Short-term weather forecast calling for highs in the 70s, overnights in the 50s. No air conditioning, no heat, right? Most of us just leave our windows open. Meanwhile, the 8 to 14-day national weather forecast calls for above normal temperatures for everything east of the Rocky Mountains and below normal for the Pacific Coast states as well. So on behalf of all of us here, I want to thank you for tuning in. If you have any further questions, you can reach out to myself or Blake. I know this is kind of a difficult time, and it's a time that's hard to be patient, and even from our end. But the market is wacky right now. It is not following fundamentals, and it's wreaking havoc due to a lot of heavy financial trading. But hopefully we can get back to some sense of just basic fundamentals and normal patterns coming up soon. On behalf of all of us here, TJ, Karen, Blake, and myself, have a good weekend.